And it is, of course, the first Friday of the month, which means it is non-farm payroll day. US jobs, of course, and well, some interesting data out today. Employers in the United States added more than 300,000 jobs last month. That is the biggest gain in almost a year. The jobless rate has also fallen to 3.8%. So that is a stronger than expected number, that number of 300,000. And that could, of course, delay cuts to US interest rates. I don't think markets were expecting this number, were they?
No, this definitely is a surprise, and it's weird, Johnny, because we've gone back and forth between good news is good news, bad news is bad news, and it's been or bad news is good news. We've just jumped around. Well, today, as you mentioned, a huge jobs data point came out. 303,000 jobs. Unemployment rate went down. Wage growth came in as expected. The takeaway here is that, again, jobs data is strong, and this has been a theme that has pushed back on the idea of rate cuts many times, but it really hasn't cracked. We haven't seen the labor market, move to 4% inflation, unemployment rate go up to 4%. We haven't seen that, and meanwhile, inflation is challenged by these strong jobs data points, right? Because if everybody's getting employed, everybody's getting wage growth, like that is inflationary in its nature. So yeah, a really strong jobs data point. And you mentioned also, of course, the key thing there is that could push back on the idea of rate cuts coming in soon. We can see that very present in the dollar index. And of course, you can see it even more clearly when you pull up individual currencies against the dollar, like the euro, right? The dollar's strong against the euro today. Same thing with the pound. These things are moving pretty aggressively because now we're seeing perhaps a divergence. Now, next week, we get central banks in Europe reporting. I believe we get the Swiss National Bank. And with these central banks, the question is now, are they going to truly diverge from the Fed where, despite, economic data coming out strong in the U.S., is that going to lead to other central banks continuing to cut rates or be dovish anyways? And if so, that's where you can get some really interesting moves in the currency world. Oftentimes we talk about if you get a very diverging story in terms of central banks, that's going to get interesting. And one thing to touch on is, of course, the hawkishness that kind of resurfaced yesterday. We heard from a lot of Fed officials, and some of that hawkishness resurfaced, and that could be something to think about.
Yes, you mentioned some hawkishness from the Fed, particularly one member, Mr. Kashkari. What did he actually have to say?
Yeah, so I think that you have to remember when talking about Fed officials that they're not always uniformly thinking the same thing. It's actually kind of surprising to think that of the group, traditionally conservative in his willingness to talk about dovishness, Jerome Powell seems to be kind of the dove in the room. Some of the other ones pushing back on rate cuts, saying that, a lot of officials have kind of said, inflation's still an issue. But what he kind of really pointed out to the market that was escalating was inflation as an issue, and if it stays an issue, we may need to not cut rates as quickly. That was kind of of course, that's paraphrasing massively, but the idea is basically we don't have to cut rates this year. We don't have to do anything. We can just pause if we need to. And that's, again, kind of a difference in narrative from, again, what we've heard from Jerome Powell, which is basically, even though inflation's kind of sticky, they still think they can get it under control, and that there's risks to the other side of keeping rates too high for too long. So it brings balance, I guess, to the story. And at that time, the S&P 500 sold off, of course, rightfully so, right? The market is very positioned right now for rate cuts. And if that story is threatened, that of course can be an issue. That sold off yesterday. It was over 1% down on the S&P, despite coming very close to all-time record highs. So big reversal yesterday. If you enjoyed this video from the Market Insights Market Pulse podcast, you can listen to the full episode by clicking the link down below in the description. You can find us on your favorite podcasting apps, and again, we post several times a week. So if you're looking for market updates throughout the week, this is the place to be. Whether you're in in the car on the way to work or something like that, make sure to tune in to get the latest. Thank you very much for watching. We'll see you on the next one.